All right, today's book of the day, A Few Lessons for Investors in Management and Managers by Warren Buffett. Or I should say it's not by Warren, but it's a compilation of his writings. So people ask me, one of the most common questions, I've compiled like the 30 most common questions I get. One is, what is the best book on money, finances, business? You know, what's that one place I can go to and just have a fountain of knowledge, everything you need to know about money? This is the one right here. It's by Peter Bevelin. And I just got done. I did for those of you who are in some of the premium stuff I do, the VIP coaching, the Inner Circle, the mini MBA business program. I went through this for about, I don't know, a couple hours. And if you're not in that, highly recommend. It costs, depending on the course, but the basic VIP one costs less than a cup. The average person spends on coffee per month. Double down on your own brain. Invest in your own brain. But I want to share a few things. I don't have that call I did. I was on a live call, interactive. You might have been on it if you're in the premium program for like 3 hours talking with people. But let me just share a few thoughts. If you get my book of the day emails, I shared a few of these too. So the first rule of making money, all right, creating true wealth, is coming at it from an investor standpoint. You look at the 440 or 450 self-made billionaires in the world, the largest category of them is not real estate, it's not gold, it's not oil, it's not sports, it's not media, it's not the food industry or hotels or fashion. What makes the most billionaires, without a doubt, about 77 is investors. It's double the nearest category, other category, more than tech. It's not Mark Zuckerberg's that are dominating the Forbes list. It's still investors. So the first rule, if you're writing this down or keeping mental notes, is no matter what you do, come at it from the standpoint of investor. So once you understand that, then the second point is, what is the criteria that will make you into a great investor? Well, in this book, and these are just quotes and compilations of Warren Buffett, who, by the way, was the richest man in the world, worth anywhere between 40 to 60 billion dollars. That's 40 to 60,000 million dollars. Owns Berkshire Hathaway, which owns, he owns 10% of Coca-Cola. He owns Gillette. He owns Dairy Queen, or a large shareholder in Dairy Queen. NetJets. Geico is a big one. So multiple diversified portfolio holdings. So he says, here's the first thing you have to understand as an investor. Anything, even if you're not going to try to be a billionaire, you have to understand the difference between price and value. And even if you're advanced and listening to this, even if you're an investment banker, a hedge fund owner, go back to the fundamentals. If Michael Jordan and Phil Jackson, his coach, worked every single practice on bounce passes, every practice, even though Michael Jordan was the greatest basketball player in the world, he still went back to the fundamentals every single day that he practiced. If that's true, you and I can always, no matter our level of financial knowledge, revisit the fundamentals with somebody like Warren Buffett. Remember, Warren Buffett was mentored by the great Benjamin Graham, who wrote books on security analysis and a lot of the fundamental understandings we have in the stock market. So what is the difference between price and value? Well, a lot of us are confused when you see something that is a high price or a low price. We necessarily impute some value to it. Let me read what Buffett says. He says, the value of anything, stock, a bond, or a business, is determined by the cash inflows and outflows, discounted at an appropriate interest rate that can be expected to occur during the remaining life of the asset. So let me step back from this price value first and go here. Remember, the value of anything is the lifetime expected income. In 2008, tremendous amount of people, maybe you or somebody you knew, lost a lot of money in real estate, whether they had their home foreclosed on them or they invested in real estate. I have a friend who sold a tech company for $15-20 million. He was still in his 20s. He took that money in early 2000, invested in all these real estate crazy projects in the desert, and next thing you know, he was back to getting a job, lost almost all his money. So you may know somebody like that. Now, some people are fortunate enough to not have a calamity during 2008. And why? It's those real estate investors who understood that the value of a piece of property, it's not the price. I was just in London the other day, and they have condos that are worth $100 million. Condos in London. I believe that's some kind of an inflationary bubble. Why? Well, what's the, or at least it's not an investment I would want to make. I call it crazy money. Crazy money goes after that. Maybe you are an oil baron, or you strike oil in Saudi Arabia, and so you have billions of dollars, so you don't care if you buy a condo for $100 million. But for you and I that are not operating on that, trillionaire quote unquote level, you'd have to go, well, what is the true value, remember, not price, of a $100 million condo? Or maybe you're looking at your own house. How much should you pay? Maybe you're in the market for real estate. Maybe you're going to buy a stock. Maybe you're thinking of buying a business or investing. Don't be always confused by the price. What you want is things that the price is lower than the value. How do you know what the value is? Price is easy to find out. You go to the store, things have price tags on them. But that doesn't mean the value's there. And you as an investor should be chasing value. Value. In fact, guys like Warren Buffett are called value investors. Now, there's different schools of thought on an investment. My advice to you, if you want to stick with the fundamentals, if you don't want to play the lottery ticket approach, try becoming a value investor. So you're searching for things where the price is lower than the value. So when you buy a piece of real estate, a house, you go, well, how much could I rent this place out for? If you could rent it out for $1,000 a month, okay, that's $12,000 a year. And let's say you're going to hold that for 30 years. You have a 30-year mortgage. What's the expected value of cash that you're going to receive over 30 years? Remember, hopefully you can raise your rents over time. If you can do the math on that, now there's a formula on how to do that. I don't have time to get into that right now. If you are in the VIP stuff and business stuff, we go more into actually how to calculate that so you know how much to pay. But for now, on this, podcast, YouTube, TV show, whatever, I want to just get, kind of a quick point into your head. This will change everything. You will begin to see that the whole world is chasing price. Price. Oh, this, that. And they're forgetting that true wealth is created when you are able to pick up things where the price is much lower than the value. You know what's a practical example of price being lower than value? This book right here. This is a hardback book. Just randomly, I paid $30 for this. I bought this one new. It's the story of Conrad Hilton. What's the value? That's the price, is $30 for that on Amazon, or I think I bought it at Barnes & Noble. Do I get $30 worth of value? Yeah. The first chapter of this book, I have things that were put into my head that will be in there for the rest of my life, as long as I don't, get hit in the head, get amnesia or Alzheimer. That's there forever. That value is creating thousands of dollars of value, tens of thousands, maybe even hundreds or millions of dollars of value. $30 price value, far and beyond. These book of the days, you're spending time right now. There's a price for you watching this. I hope the value is tenfold. This book, Social, how much did this book cost? $26. This will make you understand the newest cutting-edge research and science on what makes you click with other people, how to win friends and influence people. Now, so books are something with tenfold value over price. What are things, though, let's talk about, that it's reverse? Well, Buffett talks about this later in this book, the definition of something. He calls it a lousy. Oh, he calls it the gruesome. The gruesome. So the worst kind of investment, the grotesque kind of investment, is one that requires a lot of capital at a low return business. So it's a business that the price is high and the return is low. Now, he's talking specifically about investment capital, building factories and so on. But let's take this back to everyday life that you and I have as not, necessarily the richest person in the world. The price, in this sense, if the price is high and the values are low, what is an example of that? Well, what about some luxury stuff? What about a Louis Vuitton purse? Or actually, I don't even know if that's, I don't know my purses, but say a purse. What's the value there versus the price? Probably the price. Let's say it's a $1,000 handbag. Does it deliver $1,000 worth of stuff into your life? How about the average person eats 4 times a week fast food? You think the price is low, right? Because you're like, oh, I'm eating at McDonald's, Taco Bell, whatever, and it's only cost to be $10 to eat there or $5 to eat there. But the value is negative. It's actually killing you and making you fat and making you pre-diabetic and all these things. So there you have the gruesome price above value. You must flee and run away from anything that prices above value. You hear it straight from the words of Warren Buffett. My mentor, one of my mentors, Alan Nation, said, Tai, never invest in things that rust, rot, and depreciate. What are those common things? Big flat screen TV. You put the prices there, boom, but is the value there? Well, it's depreciating, meaning some cars are like that. Even I like cars. Sometimes I've had fancy cars, Ferraris, Lamborghinis, whatever. But I don't buy them new because you can get let somebody else carry the depreciation on it. So I'm not saying you never buy luxury things. I'm not saying that. But I'm saying from now on, this day forward, continually ask yourself, what's the price? What's the value? And I look for my personal preference. And Warren Buffett talks about this later. He calls this, you must look for businesses that have or investments that have a margin of error, meaning your guess about what the value to price is, you may be wrong. So make sure the value is way higher. That's called the margin of error. I like it, or margin of safety. I like a tenfold. So if this book, I'm going to spend $26, I want to make sure it's delivering to me $260 of return over the lifetime of me knowing this book. And I'm very certain that this book has returned to me 1,000-fold. So what's some great investments out there? There was an investment deal that I was reading about where a kid found that Hotmail, the domain name, the email Hotmail, hotmail.com, had expired. Somebody at Microsoft literally forgot to renew the domain every year. This kid bought it on GoDaddy or Namecheap or whatever registrar for $8 as an expired one. So his investment price was $8. Well, what do you think the value of that was? Well, when Microsoft found out, they actually got a court order that forced the kid to give back, since it was trademark and so on, and intellectual property. But I think they had to pay something, don't quote me, but I think it was $1 million. So what's the price to value ratio over time? Well, they probably bought it back within a week or a month. So $8 returning $1 million. That's the holy grail. That's low price, low capital investment, high return over the lifetime. When you're buying your real estate, be patient. When you're investing in yourself, college, university, maybe you want to go back and get an advanced degree, a PhD or an MBA. All assets, and by the way, just to be clear, all assets need to be valued this way. Warren Buffett says, so valued, all financial assets become economic equals. It applies to outlays for a farm, if you're buying oil, if you're buying bonds, stocks, lottery tickets, manufacturing plant. It's still about price and value. And he goes on to say, and neither the advent of the steam engine, the harnessing of electricity, nor the creation of the automobile will change this formula one iota, nor will the internet. Just insert the correct numbers, and you can rank the attractiveness of all possible uses of your money throughout the universe. It's that simple. That's not the only thing you must know, but that is the basis of wealth creation, of investment strategy. You must remember that everything's the same. Do not be chasing. Oh, Tai, is gold a good investment? Oh, is an iPhone app the next big thing? Oh, should I invest in flipping houses? Oh, people are chasing things without realizing that the asset class, whether it's real estate, gold, a business, stock, that's irrelevant. It's the price versus the value. So that means you could become very wealthy or very poor in the gold coin business. You could become very wealthy or very poor in the oil business. I was out the other day in Hollywood. Went to a private screening of the movie Whiplash, which is going to be nominated for a lot of Academy Awards. It was a little private screening with the production company that did that. I was talking to one of the investors there who's invested in, I don't know, a lot of Ryan Gosling's movies that have been out, Drive and this. And he basically brought point. He sounded just like Warren Buffett. He said, make money in the movie business. You want to be famous. You want to make money in the movie business. You want to be the next Steven Spielberg, the next Scorsese, George Lucas. He said, it depends on how much you pay to make the movie. That's the price. So he said, if you make a movie that you know is only going to generate $30 million over the lifetime, that's the value, $30 million. If you make that movie and pay the directors, and I was asking him, is it expensive to make movie? I was kind of joking. He just bust out into laughing. And he's like, movies always go over budget. So he said, the secret for me as an investor in movies is to hold the price that I pay. The amount of money we spend on sets and locations and cameras and that we give to Ryan Gosling and all of these A-list actors. I got to keep that below the value. And he said, Tai, as long as you keep the price that you pay for that movie below the expected value, remembering that you need a margin of safety. Don't cut it too close. Don't be like, well, I'll spend $29 million on a movie that I think will bring me $30 million. That's too close because your estimations will always be off somewhat. So he wants to pay $5 million for a movie that he expects to bring in $30 million. That way, if it goes a little over budget, costs him $7 million, or the movie comes in and grosses in the box office and DVD sales and Netflix a little bit less than $30 million, only 20, he had a large margin of error and of safety. Okay, that's beginning to get into some more advanced stuff. There's a tremendous amount of advanced stuff. Go to my site, tailopez.com. I wrote 2 articles on this recently that you can check out, tailopez.com. Look there in the articles. This book is absolute gold. I want to reiterate that I just went through this step by step for those people in the mini MBA business course. People ask me, should you go to college or should you not go to college? That's irrelevant because it's the price you pay versus the value you get at university. There are university degrees that you could get where the price is much lower than this huge amount of value and money that degree will make you. But make no mistake, there are college degrees, especially if you're unfocused and don't know what you're doing, that will cost you this much money and over your lifetime only make you that much, and they are poor investments. And one of the reasons I came up with this business MBA program is that I wanted to create something not built by professors, even though I love professors and they have tremendous knowledge, but I want to have an alternative too, and it's a mini MBA. It's obviously not a regular college degree. It's not accredited. You're not going to get a certificate. If you need a certificate, you have other issues, if you ask me. I dropped out of college. I'm an entrepreneur. Not that there's anything wrong with degrees, but remember, at the end of the day, degrees are pieces of paper. Value in your brain is what you must create. Best investment you can ever make in yourself is doubling down. Go to seminars. I pay $1,000 for seminars, and I went to one Titans of Copywriting in Connecticut in September. Value. It was not a cheap seminar. I think I paid $3 or $4 grand, or maybe even $5 grand, $3 to $5 grand. But the value, even one little nugget, I heard the guy Guthrie Ranker, he's doing about $2 billion, I think, in sales in his company. And I heard him talk and got to meet him as CMO. We bumped into each other. There's more than $3 to $5 grand value. The price money I spent, the expected value over the lifetime of my brain, knock on wood, hopefully I stay healthy, should be 10 to 100 to 1,000 fold. That's how you must begin thinking. Knowing this today, And this is just a preview kind of, these book of the days are free things that I do when I have time. Unfortunately, I don't always have enough time. If you notice, I haven't put one out. But if you come into some of the premium programs, that's where I put most of my attention. People that meet me halfway and really commit to doing something. You can go in a mini MBA program for 1 month, or you can stay. It goes up to 18 months in continual learning on financial freedom, how to get the 4 levels. Most people are in scarcity. You want to get to financial independence, minimum 70 to 120,000. Above that is prosperity, 120 to a million, and above $1 million a year, you'll become someone who can create wealth and impact. Money is not everything, but on the flip side, it also is not to be discounted as something that's not important. It's more important than people that think. So pick up this book, Few Lessons for Investors and Managers. I have it on my top list. You can go to tailopez.com/books. Also check out the 67 steps. That's the basis of everything I do, 67 videos that will change your habits. And you can join the free book club if you're not already on it. Now, I have a few questions for you that I want you to answer. By answering these videos with intention, okay, with intention, you will get more out of what you just heard, and you'll begin to become a value investor. You will begin to grow. When everybody around you is always struggling, you will begin to move up the chain. Okay, now, the first question is, I want to start asking this. What videos would you like me to do next? Right? I have so many options. I have thousands of books. I order 10 to 20 new books a day. I read a new book every day. And so what would be a subject? If you just leave that below, and that gives me ideas. Can't always get to them, but if I see a trend, a lot of people asking something, I will record the next videos on that. Number 2, where's an example where you've been confused, where you have paid more for price than the value received? And how are you going to avoid that in the future? That's of absolute importance. All right. Lastly here, there should be, if you're watching this as a video, look right below here. There should be a button that you can click on. It will take you. You can learn about the 67 steps mini MBA and joining the free book of the day club, or joining the premium stuff. Come into the premium stuff. I'm telling you, I don't do this for money, but I like people to meet me halfway. As Joel Salatin used to say, I don't mind carrying a man, but I don't want him to drag his feet. With this knowledge that we're doing in these twice a month VIP, I'd like to invite you to that. It's like I said, I'm not doing it for the money. I see the value. We had 500, 600, 700 people on these live calls, and I'm answering everybody's questions. We're going through these, and also you are making the intention, the habit forming of saying, yeah, I'm going to put my neck out there and change my financial status. I don't care how wealthy you are or want to be. The fundamentals in this book, I didn't get into this, but I'll leave you with this. What is the definition of a really great business? Buffett says, those businesses that have high returns on capital and that require little incremental investment to grow. You want a business. I talk about this, the virality effect. How do you create a business? It's like a boulder pushing up a hill. You push it up the hill, but once it gets to the top, it rolls on its own. You must stay away from businesses that require ongoing, continual, heavy uses of more cash investment capital. So the really great business, he says, high returns, a sustainable competitive advantage, and obstacles that make it tough for new companies to enter. As I talk about, if you're in the 67 steps, the Eulerian destiny, you must find your area of competitive advantage. Didn't get totally into that, but once you understand price and value, the next thing is like the Oracle of Delphi. You must know yourself, know that area of competitive advantage. Even if you already work for a company or started your own company, you got to tweak it towards more your advantage. What's an advantage I have in business? Well, if this is a business, what you're seeing now, this book of the day stuff, well, I have an advantage that I read very fast, and not many people like books as much as I do. So there are some people, but I have a protective moat around this business. There will be people who try to compete with me in business, and that's okay. But it will be the mass of people will not try to compete. So whatever your idea is, don't just think how great is this next idea. Don't think, think of what is that moat around your castle. Your idea is the castle, and you must create one of those. I don't have time to talk on that, but we can talk about that sometime. Come into the VIP. There should be a link here. Again, book of the day. Get reading. Double down on your brain. This book, these books are $10 or $20. If you get them used, sometimes they're $5. And imagine the value pouring into your brain. Imagine the value's 100-fold. I buy books for $4 and they, instantly give me $10,000 worth of value. Look at the return. It's insane. So don't be penny wise and dollar foolish. Okay? So thanks so much. And check me out on Twitter at Tai Lopez, Instagram Tai Lopez1, YouTube Tai Lopez Official. Oh yeah, if you want these regularly, please subscribe if you're here watching on YouTube on the button below. That way you get the stuff first before everyone else sees. Okay? Thanks so much. Talk to you soon.